Over the last 2 weeks, there's been a number of breaking news articles and media rumblings that are causing a lot of unrest in the housing market right now. And many people are feeling a little bit uncertain about where things could be headed. Some people think the sky's falling. Some people think there's a housing crash coming, and others, well, they're not thinking much about anything. So where does all of this leave you if you're on the fence to buy or sell a house anytime soon? And that's what we're talking about today, and we're going to unpack all of it right now. If this is your first time to the channel and you want to know everything there is about living, working, and playing in Charlotte, North Carolina, then hit that subscribe button below and click on the bell for notifications so you can be the first to be up to speed and learn everything there is about everything going on in the Charlotte real estate market. My name is Brian Taylor and I'm the owner of Dreamline Realty. My team and I are passionate about helping people make Charlotte their home, and we get calls and emails every single week from people just like you that are looking to make their move to the Queen City or already live here looking for their next house. So whether you're looking to move in 2 weeks or 2 years, we'll be ready to go when the time is right for you. Just give us a call, shoot us a text, send us an email, or better yet, schedule a Zoom call with us so we can get familiar with your situation, put a face to a name, and help you plan your smooth move to Charlotte. And there's a link in the description that will take you directly to our calendar. So there's been a lot of chatter happening in the housing market over the past couple of weeks, and it's causing some unrest and anxiety for a lot of people, mainly buyers. So I wanted to take a look at 3 key areas and explain what is taking place, talk about the impacts that these things are having, and give you my personal predictions of where I see the housing market heading as we head through 2022 and beyond. So the first thing I want to talk about is inflation. So in March of 2020, when the pandemic hit, the Fed funds rate dropped to 0%. And the Fed funds rate is the rate at which banks essentially borrow money from each other. And the purpose of dropping this rate to 0 was to jumpstart the economy due to high unemployment and decreased levels of consumer spending. And at a rate of 0%, borrowing money became very, very cheap, and demand for certain products and services ramped up substantially. And at the same time, mortgage rates during this period of time went to all-time lows and the housing market caught on fire. Now, it wasn't only because inventory levels were already at record lows, but with interest rates in the 2s and 3% range, housing became extremely affordable. But the problem, however, is this: with so much demand for housing and other products and services, the supply chain became jammed up and these products and services couldn't be delivered as quickly. So remember, we're dealing with the heart of COVID at that point in time, and many countries that we depend on for these goods and services were shut down. So naturally, when you have high demand and limited supply, prices are naturally gonna rise. Not to mention, during the pandemic, many people decided to leave their jobs, the great resignation that we've all heard about, and employers across the country started paying people more money to either stay at their current job or to come back to work. So with wages going up, people having more money to spend, the cycle just goes on, and everything becomes more expensive. As you may know, some economic data was released last week that said the inflation rate is at a 40-year high and it sits at 8.5%. Well, the only way to stop inflation and get it under control is to raise interest rates to make it more expensive to borrow money. So in February, the Fed met and raised interest rates 1/4 point and said, oh, by the way, we're prepared to raise rates 6 more times in 2022 alone. So when these words are spoken, the markets naturally react to what is coming down the road, and mortgage rates started to follow suit in expectation of these future rate increases, which leads me to point number 2. My second point is rising mortgage rates. So this morning an article came out on CNET and it reads, here are mortgage rates for April 20th, 2022. Rates continue to go up. It then goes on to say the average 30-year fixed rate mortgage is at 5.27%, which is up from 3.25% just a year ago. Now, the significance of rising rates is they are pushing a lot of buyers out of the market and making home buying unaffordable and unattainable, which is really, really unfortunate, especially for first-time home buyers. Now, we could go on this topic forever, but now the question becomes, how high will mortgage rates go? And I don't have the answer on that just yet, but my guess is that we could cross 6% by the end of the year. But let's keep things in perspective here. Yes, rates are the highest that they've been in a decade, but it is still a great interest rate. When I got into the business in 2003, rates were about 6 to 6.5%, and the housing market was soaring. I think part of the shock that people are facing right now is that interest rates have been so low for so long, meaning in the 2s, 3s, and 4s, that any increase in the rate seems like a shock to the system, which takes me to point number 3. Point number 3 is rising home prices. And as you know, housing inventory has been at record lows for several years now, which is causing prices to rise at record levels. Again, simply due to supply and demand economics. Last year in Charlotte, prices appreciated at an average rate of 20%. In fact, just this morning, the March numbers were released, and as you can see, we were at 20.4% appreciation year over year. And the same type of appreciation is not expected this year, but most believe it will be closer to 12 to 15% and then potentially a little less going into 2023. And the rising interest rates are going to help soften this buyer demand, but with inventory at such shortages, time will tell just how much appreciation will be impacted. The thing to keep in mind is that there are about 120 people a day that are moving to Charlotte, so people are still going to have to buy a home regardless of prices or interest rates. The point that I'm trying to make with all of this data is that the sky is not falling and we're not headed for a housing crash. It is still a great time to buy a house if you're qualified and you're able to. I say that because yes, you will have a higher monthly payment than you would have had a few months ago, but rent isn't likely any cheaper as well. But more importantly, if you bought a house today at $400,000, for example, and it appreciated just 10% next year, that house would be worth $440,000. And then if it appreciated at another 10% in 2023, your house would be now worth $484,000. That's an $84,000 increase in equity in just those 2 years alone. That to me is worth the higher monthly mortgage payment at a higher interest rate than not buying at all and deciding to rent, assuming you could afford the house, of course. Plus, if interest rates come down in the near future, you have the ability to refinance your loan to a lower interest rate, and it becomes the best of both worlds. Okay, so where do I see the market headed as we move forward? First, let me just say that we are in very interesting times. We have not seen rising rates and rising home prices happening this quickly at the same time, so nobody really knows what's ahead. However, basing my thoughts on the simple data at hand, I think rates will continue to rise, and I think we could be as high as 6 to 6.5 in the next 12 to 18 months. As far as inventory goes, I actually think that we are headed into a season where we could be in a less inventory situation coming up. Now, why do I say that? It's because there are a lot of sellers right now that want to sell and cash in on the equity gains that they have made over the last few years, but they are sitting on a fixed rate at 2.5% or 3%. So there really isn't any incentive for them to sell and have to go find somewhere else to live and buy on the high side, and at the same time, leave their nice low interest rate in exchange for a new rate that is potentially double what they have now. Likely doesn't make sense for a lot of those people to do that unless they really have to sell. What I do see down the road, however, is inflation over time getting under control and interest rates starting to come back down. And my hope is that is sooner than later. But my hope is that over time as well, inventory does start to increase, especially if home builders start building homes at a quicker pace to outrun this buyer demand. But one thing I know for sure is that my team and I are going to be here to help guide our clients through these unforeseen times to help them understand the market so that they can make a great decision when the time is right for them. So if you would like to discuss your current situation in more detail, please give me a call and let's talk, and my contact information is in the description below. Thank you for watching this video, and if you have not subscribed to the channel, go ahead and do so now, and then click on that bell for notifications so you don't miss any of the videos I put out every week. And if you're interested in seeing some neighborhood tours about new construction in the Charlotte area, you may want to check out this video where I did a video in Mint Hill with Lennar Homes at the Estates at Arlington Woods. And as always, make it a great day.